All right, folks. Thursday, 4 p.m. That's about 1 hour after the equities closed over here. Um, all right, so let's do a quick recap on what was happening first in the stock market, right? Through the entire day, I mean, basically what we were doing was we were looking at this particular level right now, kind of as a fractal, which was a gap down, break to the downside, hopefully retesting the top right here, and then what we're expecting, I guess, is tomorrow, Friday, we start seeing this kind of sell off right here. Okay. So um, I personally see this on me almost like in exactly the same fractal, right? Move up, pulls back down, breaks down with a gap down here, pulls down right here, gap down with the gap down or gap down move right here, below with two candles, pushes back up, retest that same support as resistance right there. Slightly above, obviously, and just slightly above close right there. And then we're expecting the next day to sell off. Okay, so that would mean tomorrow, Friday, we should start our descent in the equities market. Okay, and so I actually posted over here in the equity options. I actually added more to my July and September puts on this, what I particularly found as a Ponzi pump. Because, I mean, honestly, like, it's only sustainable for so long to have pumps like this when you know that the overall picture of the market is bearish. You have bearish news coming out, whether it's more coronavirus deaths, um, more QE injections into the market. Like, I don't know if you guys saw this, my retweet right here. Make sure you guys follow me on Twitter because, like, I will make sure I retweet the important stuff that you want to look at or that you should be looking at. Okay. So you can see the Fed's balance sheet surged by another 600 billion in the past week to about 5.77 trillion dollars. Okay. So we're basically in the middle of, making that printer just print wildly. All right. And so on top of that, obviously with the coronavirus cases, the 6.5 million jobless claims today, 6.5 million folks, or was it? Uh, Let me see here, 6.6, sorry, 6.6 million jobless claims. And then B of A, Bank of America, the recession appears to be deeper and more prolonged than we were led to believe just 14 days ago. Yeah, no shit, because 14 days ago, we were thinking that the case count would go down. We would magically just, flatten the curve, but that's not happening because we're not doing anything in America about it, right? We just started putting the states on lockdown after we got to 200,000 cases, okay? So, of course, the death rate is supposed to get higher. The infections are going to spread more. And by the way, there's no national lockdowns anyway, right? So undoubtedly, you're going to see more infections, going to see more pressure on the hospitals, going to see more people potentially taking sick leave, even if they do have to work, more people potentially dying. So all in all, I mean, it's going to be a rough few weeks. Even Trump himself actually admitted finally that it's going to be a rough few weeks, right? And so when when the president starts freaking out, the bond markets and the equity markets are going to start, factoring that in. 2 days ago, obviously being March 31st, what was effectively happening was, rotations of, fund managers and people in the banks going from equities potentially moving to bonds, because that's essentially what happens around quarterly closings. So what we see is, where was it? I had written about this. QEN rebalancing should be complete. I'd say fund managers probably hedged into bonds more. So the way I see it, this is a dead cat bounce after oversold conditions in the market. And we have given it enough price in velocity to cut more equity inventory. So now that we're finished with Q1 and we're heading into Q2, asset managers are trying to define the risk in terms of their portfolio. So probably means more cutting of high risk assets, whether it's Bitcoin, equities, I don't know. I mean, if essentially everything across the board that is an investment that doesn't have somewhat of a protection from recessions, which pretty much nothing really does. Maybe gold a little bit, but even gold was getting cut, over the last several weeks. So the point is, I mean, cash is really the only true safe haven seen right now. Okay. So anyway, kind of relating this back to the Bitcoin markets. Obviously, we saw this big, push up towards $7,300 on this big move. And, I mean, this is a very ugly candle. Obviously, I don't need to tell you guys. But the implications of this candle and potentially the following up of that is number one, as I pointed out before, we had the yearly open right there around 71.50. I actually took a short there, but then quickly got stopped out, like I said, due to the fact that I had to do the cooking in the house today for lunch. And so I wasn't able to monitor the trade, right? But I gave you guys a heads up in the Bitcoin analysis channel to let you guys know, exactly what's on my mind, right? I mean, well before we even got there, okay? So, this morning I posted that, and so you should have been prepared in some way, somehow. And that also was the 100 weekly moving average as well as the 2020 yearly open, okay? So if you got to catch that move at all, kudos, because, you're now $400 into the positive of your short trade. But if you're not in the positive and you're kind of sitting on the sidelines like myself, here are a couple things that I'm going to start doing, right? Number one, okay, here's how I'm looking at the current price action to give me a potential short opportunity. And again, as I've stated, I don't really want to look for longs because it doesn't make sense to me, all right? Again, I will be wrong many times when it comes to shorting in this market, but eventually the market is going to have to pull down and correct, right? You can't just go up continuously on negative news, especially something like Bitcoin, which doesn't even make sense why the hell it's even going up anyway. So for the most part, what I'm looking for is, as I stated, the trigger is something like this, maybe testing that as resistance and then breaking down, okay? Once we start taking out these stops right here, we'll get to see the strength of Bitcoin to, tap into the long stop liquidity right here, its ability to maybe try to push back up, okay? And if anything, we might get a better trigger even up here somewhere, 7,000 to maybe 7,050. If price kind of just goes like this and then starts creating a lower high like that. So that's another possibility with the short up there. And as this starts breaking down further, we can move our stop down here, okay? But for the most part, this is the kind of trigger I want to look at is, this kind of movement, up, down, breaks down. And once I finally see this move right here, and we see that this base right here, that was previous support, now becomes resistance as per this right here, place a stop up there and ride this down, okay? And where would we be riding it down towards? Well, let's look at it, right? So let's now change up the fibs, okay? So the fibs don't really change a whole lot. 382 now becomes, $5,800, $5,880 or so, 50% becomes $5,500 or so, and so on and so forth, okay? Alternatively, you could look at the horizontal levels just as 62.33, that's a big one, 64.10, which is this, this daily level right here. What the heck is it? Let's go over here. Hang on one second. Which would be this daily level, right? So that'd be the 64.10 area. That would be your first target for your short. And then, next area would be 58.75 or so based on this particular chart, okay? But for the most part, again, I mean, I'd still be looking for shorts other than, longs, or rather than longs, okay? Let me see here. So let's see if there's anything else I wanted to talk about. Oh yeah, so oil, U.S. oil, right? Obviously, we saw, Trump tweet about oil today, about Saudi and Russia potentially pulling back their oil production, which again, sources from Saudi Arabia and Russia have not confirmed, supposedly. So, this pump right here, so if you're, looking at the oil trading channel right here, this could be a potential shorting pop right here, right? You can place a stop somewhere over here around 27.5 and watch this thing ride down. I still do believe that oil is definitely seen its highs, for its life. Okay, let's be real. Like, oil is not as big of a commodity as it used to be in the early 2000s or 90s or even 80s. Okay, it's just the fact that society is pivoting away towards alternative energies. We're less dependent on oil. Oil is also cheaper because there's also so much supply. Whether it's Venezuela, Russia, Canada, Saudi Arabia, and even the United States, which is actually a big oil producer, right? So oil doesn't need to be this expensive. And just because, Trump tweets about, ratcheting down oil production for Saudi Arabia and Russia, what does that even mean? Like, why should price go up when there's still a supply shock, meaning that there's excess supply and not even the amount of demand, right? Because we're all sitting in our freaking houses. We're not driving. Airplanes are not flying. Cruise lines are not moving. So for the most part, coronavirus itself will already tell you that, this is a great short trade. It's really not a whole lot going on over here regarding oil and fundamental changes, right, to warrant such a big spike in oil. It went from this morning $20 all the way up to $27, So I don't know, in some instances, when you see the president tweet something like that, even though it's not particularly accurate, there's money to be made from it, So going back to Bitcoin, nothing really special going on in Bitcoin either, right? All we've really done is, if we put a line right there, just like that, all we really did is take out liquidity up here all the way to $7,300. And we could start our descent in Bitcoin possibly today, maybe even tomorrow, okay? Any questions so far? Any questions? Yes, no? And by the way, on XO as well, I also stated that, if you look at this movement up and then down, look at how many positions got torched. First, the shorts got destroyed right here by almost 22 million, right? And that was just on this hourly candle. And the following hourly candle, then the longs got torched by about 22 million, right? So, both directions, both sides got destroyed. And then on the way down, looks like we lost a little bit more longs right here. Another 2.5 million, another 7-8 million right there. So I would say the path is a little bit more clear, possibly, for our movement down in Bitcoin price action. I really would like to see another nice opportunity like this up here. And that would be, I think I did a fib retracement. So let's just say if we did the high to low like that, get me towards 50 fib, which is 69.70, or this golden pocket around 7,050 or so. And that's our potential short opportunity, right? We get a good short opportunity. I wouldn't really want to short here right now unless we see that real breakdown, like I said, right around, like I said, this area down here, break down below $6,500 or so, which would be this kind of movement like that, and then start breaking down. Okay. So until then, I'm just going to wait. I'll wait for my trigger. I'm patient. All right. Do you believe this could be a long opportunity? Why wouldn't you long and then flip to short a bit higher? That's a good point. I just don't know. I gotta be honest, I don't feel comfortable longing in these markets because overall my bias is short, right? So when I'm longing, it's like I'm betraying my own understanding of what's happening in the micro and macro structure. It's very possible, yes, I could long, definitely. But what would really piss me off is I long, right? And then I get stopped out. and then I get stopped out like this for no reason, and then price pops up towards my short entry, and then it starts breaking down. Or it does, something like this, starts breaking down, and then does that and gives me the perfect short entry and trigger. So you could see that, just because there's long opportunities available doesn't mean you need to take them, right? Especially given the fact that, the higher time frame bias is telling you that, hey, if you just wait patiently, you'll get a good short entry, instead of me being wrong in my long scenario and me losing money in terms of my stop getting hit, right? So yeah, I know it's a convoluted way of explaining that, but I don't know. I just also haven't had that good of a luck in longing, to be honest, and I'm happy to admit that because, hey, I also stated that there are certain times where I just don't have, certain quote unquote luck in terms of the direction of the market or even particular assets, right? So for example, like I like trading the Aussie dollar because my system of horizontals works. Doesn't really work for the British pound dollar, right? I don't know why, but it just doesn't. I just get screwed more. So I know my strengths and weaknesses, right? I know also not to make mistakes and piss away the capital for no reason, Could the oil price trigger a surge in BTC or stocks if the market has more or less already priced in the virus effects? Just trying to be open for the other scenario. It's very possible. That's a great point. But if you think that a 30% drop in coronavirus from this high to this low has priced in the upcoming recession as well as many deaths, I still think that we're severely off. As in, I still think that there's at least another leg down. It just doesn't make sense that 35% drop is all we needed in the markets. It just doesn't make sense to me. Because if we're facing recession, if we're looking at, again, today we had 6.5 million jobless claims. Next week, supposedly we're supposed to expect the same, if not more. We're seeing, talking to some of my friends who got laid off or had to shut down their restaurants or businesses. Some of them actually don't even know if they can, start back up, right? They also don't know if they want to take on more of a loan from the federal government just to get going, in terms of the business. They figure they'd rather just, stop and restart their lives in corporate America or do something else. So you can see that the long-term effects of coronavirus, in my opinion, are still not factored in. By the way, it's not even, my opinion. I just showed you guys earlier. Number one, we're adding more and more assets to the balance sheet like it's, freaking candy. Number two, where was it? Right here. B of A actually believes that the recession appears to be deeper and more prolonged than we were led to believe. We now believe that there will be 3 consecutive quarters of GDP contraction, with the U.S. economy shrinking 7% in the first quarter, 30% in the second quarter, and 1% in the third quarter. Okay, I don't think that if we're shrinking 7% in the first quarter, which we just had, and 30% of the Q2 is factored into the markets. Definitely not. Okay. So yeah, I don't know. I guess it's, to keep my mind open. The oil trigger and surge in price to me definitely does not mean anything. That I can tell you honestly, like I don't care if oil goes up because there's no demand for oil right now. The economies across the world are shut down. So what does it mean when prices going up for oil? There's no demand. There's no people going out there, right? People are not using oil. Companies across the board are shut down. People are not traveling. So I don't know. I just kind of find it hard to believe. But, again, where am I wrong, right? So I'm wrong when, if say tomorrow or Monday, we start seeing movement back up towards 2,600, maybe even 2,700 points, okay? But even then, I mean, like look at it this way. We're right near the 382 fib anyway, right? So it's not like we had, I don't know, it's not like we had that much of a bounce anyway. I mean, I still do believe this is a dead cat bounce, but I also think that even in this dead cat bounce, if we push up, let's just say to the 50 fib, we could still come back down, you know? Um, I guess to try to correct my bias, let me do some more research, I mean, let me try to figure out how many different ways I could be wrong. Listen, maybe you see something in the economy and the numbers that I don't. It's very possible, maybe there's other people out there who are seeing that this is already priced in. Fassel and I can tell you honestly, we don't believe that's the case, especially just hearing the picture and a word on the street from people we know, families we know, friends we know, across America in different industries. It's a pretty grim picture, folks. Like, there's really not a whole lot of optimism. In fact, there's far more pessimism about the American economy, being able to pay your rent. By the way, April 1st delinquencies, I just saw a chart earlier, through the roof. Okay. I mean, makes sense, obviously, because, people don't have jobs. The government hasn't given them their stimulus. And the fact of the matter is, here's something else that I wanted to mention to you guys that no one is really talking about. Okay. And I mentioned this on different points over here. Okay. So the tough thing that no one really wants to talk about is, how is it possible that the most powerful economy in the world, America, can implode in less than 1 month, with millions unemployed, massive corporation bailouts, required government stimulus up the wazoo? How is it possible that, America is a society where we have such a strong economy and within a month we crumble? I doesn't make sense, right? I don't think anyone is thinking like, it's kind of like this, okay? You know how you're told in America or basically anywhere in the world that, hey, before you quit your job, like, make sure you have some savings, right? Make sure you could survive for 3 months, 6 months, just in case you don't have a job, just in case something goes wrong, just in case, like a rainy day fund, right? Imagine the kind of collapse that we had in 1 month of not working in America. So America is by definition the dude who was, in debt up to his eyeballs. Okay, America is that guy, right? And so when you look at that guy, you're like, oh my God, like how can this person be such a, I don't know, such a heavy spender, and how could he or she have racked up so much debt that he can't even survive 1 month without needing the government to bail him out? See, that's the sad part about America, is that we're a very levered up economy as well as a credit-based society. Everything runs on credit. The velocity of money and the movement of money constantly is really what keeps America going. Okay. And so when the movement stops, when the movement of money stops, the economy itself crumbles, because debt and credit is the only thing that keeps America going, right? Constant work, constant, kind of like what's the old adage, like robbing Peter to pay Paul kind of thing, right? But in this case, it's borrowing from Peter to pay Paul. So either way, you're borrowing from someone, you're the one who's in debt, and then, you got to pay someone back, right? Does that analogy kind of make sense? Or am I losing everyone? Yeah. So, okay. So anyway, point is, you have to step back and kind of look at the world problems and say, okay, I understand that there's a virus out there. I understand that, the economy stopped, but does the economy need to like crumble? Like capitalism itself like starts imploding because of 1 month? I mean, does that make any sense? And, people don't think that when you apply individual examples like what I just gave you, people don't think that that's applicable to governments. It is completely applicable, okay? If governments and people ran their balance sheets the same way, I can guarantee you America would be screwed. Okay, I can guarantee you that we would have a poverty rate of over 50%, we wouldn't have the sort of working class that we do. And we would absolutely crumble as a society, as a capitalistic society. Okay. What keeps us going is the velocity of money and the movement of credit and debt. Okay. But once that cycle stops due to the virus, this is the worst nightmare for capitalism. I think Fassel said that as well last week, right? Because we need movement in the economy. Okay. And, you know, other countries which don't have as much debt, right? They can do a little bit better. So terrible example, but Russia, you know, fortunately and unfortunately, doesn't have that much debt. You know, I think it was Indonesia or some other country. You know, they also don't have that much debt. In fact, they actually own U.S. debt, meaning that the U.S. is effectively selling their bonds to Indonesia. So Indonesia, in effect, owns some of America, right? And so when America basically fails to make those payments to other countries, we are causing sort of mass scale liquidations, if you will, right? Because if America can't pay its debt to other countries, then the other countries cannot, you know, lend the money to their corporations, their companies, etc. You know, there's a whole cycle of shit. I know it's like really complicated to understand, but it is crazy to think that this is the cycle that we're in 1 month, you know, in 1 month. And we have to still grind through this for the next several months, probably, right? So anyway, you know, sorry for the morose talk, but we see Bitcoin price, you know, popping up a little bit, right? So you can see it moving up a little bit, inching back up. We want to see it start popping past, you know, 68, you know, 90 or so, this particular lower high in the 15-minute. And so you could start seeing maybe some shorting opportunities once it starts moving back up here. All right. So yeah, I think I pretty much talked about everything. Let's see here. And by the way, you know, keep reading these points too, whatever I post on Twitter. And I know folks that have been a little bit more political lately, but I promise you that, you know, even though I used to support Obama, I could at least criticize him, right? And so when I criticize Trump, it's merely in the fact that he's just, to be honest, he's just not doing a good job. His administration has not done a good job over the past several months or several years. You may disagree with me, but you can't deny the fact that, you know, the present stage that we are in an economy, or what we're doing regarding the coronavirus, is somewhat his fault, right? I know people who are Trump supporters want to sort of back away from that, but it's okay for you to blame and hold the president of the United States accountable, folks. Like, it's all right. It doesn't mean that you dislike the president or anything. It's okay for us to say that, hey, the guy fucked up. Like, it's okay, you know, for us to say that. And when we start holding politicians accountable, we as a society and as citizens become stronger, because we stand up against the government and let them know that, you know, go F yourself if you think that, you know, you're going to take away my rights, or you're going to, you know, keep walking over us as people, right? So that's what I expect from, you know, whether it's the community or citizens at large, to realize the magnitude of the problem that we're in. And the fact that, you know, if in 1 month we can collapse as a society due to, you know, our economy temporarily taking a break or a vacation, I mean, it just, you know, says volumes about the fragility of the U.S. markets. You know, we've never had, we've had the highest level of corporate debt, growth, and profitability in corporations was already slowing down pre-2009. Just FYI, just so you guys know, you know, statistical data, and I can back this up Sunday. I'll show it to you guys. You know, so it had nothing to even do with the coronavirus, like completely, you know, obliterating the economy. It was going to happen anyway. It just so happened to be that the coronavirus, like I've said before, was the pin that popped the bubble. And the bubble is everything, whether it's, you know, energy, student loans, corporate bond debt, you know, bailouts necessary for corporations, everything across the board. And you think that the government, you know, printing a measly like $1 trillion a month or something is going to solve that. Not really. I mean, this is a multi-trillion-dollar debt. Like, it's going to take a ton of money to solve. Or alternatively, what you may have to do is, unfortunately, let the free market take over and let some of these industries crumble. Okay, and it's a sad part of life. But if you like capitalism, that's how it works. Sadly, okay. I know people love to talk about capitalism and how great it is, but if you really do love it, you actually need to love and appreciate and embrace, free market capitalism. Okay. And free market capitalism also, by the way, okay, also, it could also mean that Bitcoin could go to 1,000 or 2,000, because free market is all about, who's willing to pay what at a fair value. And if Bitcoin is not valued at 6,800, it could be valued at 4,000 or 2,000, if that's what the market deems its value to be. Okay, you can't get pissed at the market, because the market forces are doing their job. They're valuing things back down to earth, rather than these significant valuations that we've had in the equity markets for years, all over here. Remember that, since, 2018, 2019, all we were really doing is doing the best to keep the economy going with, number one, repo injections, number two, lowering the interest rates. As I stated before, on this entire movement up 2018, 2019, growth was slow, okay? Profitability in corporations was slow. Corporate debt was going even higher. Companies like Boeing, and I've explained this before, companies like Boeing were already, in their decline before, this whole coronavirus thing happened. Okay, so don't tell me that Boeing needs, a bailout, because they were already on the decline. They were a failing company. It's not our fault that they did buybacks of, $40 billion, made sure execs got all this, bonus, and shareholders got the kickback, and now they expect the U.S. government to bail them out. I don't want to hear that, right? Give the money to people who need it, okay? If you're really trying to give out money, start giving money to people in America. They will ultimately bring the GDP back, because they will essentially give the money back to the economy, whether it's buying things, paying for rent, buying goods and services, starting up new businesses. Boeing is not going to do anything, right? Boeing is going to keep the same amount of jobs, probably even less. Remember, United Airlines, once they realized they got their bailout, guess what they did? They started saying that they're announcing layoffs. This is the point at which we've come to in America, is as soon as airline starts announcing that, they got the bailouts, then they start laying off people. That's like the biggest FU to the government. That's how they show you that, we expect a bailout. They know that, the US government is not going to let them fail, right? So this is how arrogant they are. This is what capitalism has come down to, is asking for handouts, from the government, right? I mean, so this is what I mean, like, give money to people who need it, whether it's to pay rent and utilities and start up businesses. Make people feel empowered that, hey, it's okay for you to take a risk to start up a new business. Remember, I think it's like, 50 or 60% of the GDP in America is actually built off the backs of small businesses. Majority of the jobs, part of small businesses, okay? So it's the small businesses that is truly what makes America. It isn't these corporations that become, too big to fail, and then, once they start crumbling, they ask for a bailout. And even when they get a bailout, they can't even rehire, or don't want to rehire, the same amount of people that they used to have, due to cost saving measures or whatever the crap that they say, right? Anyway, let's see here. Any other questions, folks? If not, I'm going to get off the analysis. So yeah, I mean, listen, I have a pretty good, understanding of how equities work. And I know people think that, I may be a little bit more too critical of how capitalism works, or the current administration, or anything. But what I'm really looking out for is people like you and me and everyone else in this community, and even everyone else in America, those that are actually struggling in America, right? It's never really the corporations that are going to save you, from poverty. Let's be real, right? It's the the bond of, the country. It's the spirit of the country. It's, the country empowering you to take risks. I mean, that is the American quintessential dream, right? To be able to come to America, live the dream. And, once you realize that if you put in, the hard work, you could actually build any business, any dream possible. That is what America is in its essence. But, I feel like sometimes we lost that a little bit, So anyway, all right, I know I said I'd wrap up the analysis, but I'm going to finally wrap it up. All right, folks, thank you so much for joining. Again, like I said, I'm still looking for short opportunities, and I'll let you guys know exactly what I do. All right, y'all take care. Cheers, and I hope you enjoy this analysis.